The long, complicated story of one of India's most high-profile and troubled shadow banks seems to be reaching its final chapters.
The latest on Reliance Capital resolution saga, the second round of the auction has concluded, and sources say Hinduja Group was the only bidder to participate.
Reliance Capital, Anil Ambani's ambitious financial services venture that once sought to compete with the best Indian banks, has been in bankruptcy court for more than a year.
The Reserve Bank of India has superseded the board of Anil Ambani Group's Reliance Capital and has appointed an administrator. The central bank has said the decision was taken due to defaults and serious governance concerns.
Reliance Capital's resolution has received tepid response, as only 4 firms have made financial bids for the entire company, including its subsidiaries.
The race for debt-ridden Reliance Capital has reached its climax, it seems. Torrent Investments has emerged as the highest bidder, with Hinduja being the second highest.
Torrent Investments has written to the Reliance Capital administrators in protest of Hinduja Global's revised bid for the debt-ridden company.
Reliance Capital insolvency case. The Torrent Group has filed a fresh plea in the NCLT to stop lenders from holding a second round of auctions.
Sources tell us that the Committee of Creditors has voted in favor of conducting a second round of auction.
Reliance Capital, or RCap, was the last major bastion to fall in Anil Ambani's once massive business empire. It was in many ways also the last significant twist in Ambani's downturn and fortunes that made it so divergent from that of his brother, India's richest man, Mukesh Ambani. Now, the unraveling of Reliance Capital has been complex, riddled by a maze of lending and defaults within group companies, critical share pledges, and crisscrossing legal cases. The resolution process is complicated too. You see, RCap has 20 subsidiaries and 5 associate companies. And the process for the most part has been a 2-horse race between Gujarati pharma giant Torrent Group, which also has interests in power and gas, and the automobile to hospitals to banking conglomerate Hinduja Group. Both see tremendous value in RCap's assets. Primarily, it's still fairly lucrative insurance business. And now that Hindujas have taken the lead in the final lap of the race, is the climax of this story going to be smooth? Not quite. So in this episode, we take you through the rise and fall of Reliance Capital, what opportunities it holds for its winning bidder, and what are the challenges ahead before the winner can finally take it home. I'm Anil Ambani. It's the 4th of May, and this is the Morning Brief.
Jai Shri Krishna Kokilame. Good afternoon, everyone. Thank you for joining us today. I'm both proud and excited to share
That
with you the key
is Jai
highlights
Anmol
and
Ambani,
progress
Anil Ambani's son and a director in RCap's board, addressing shareholders 4 years ago.
We are the number 1 NBFC in India in terms of net worth, with a balance sheet size of over 93,000 crores, and we manage assets of over 4.5 lakh crore.
RCap's growth in the last 7 years had been super aggressive. It started several businesses from ground up and expanded others through acquisitions.
We were at the right place in the right time. The ambitions were really significant. We wanted to be amongst the leaders in the financial services, and we were actually planning to kind of track ICICI Bank because they had pretty much all the pieces in place, and we wanted to do better and we wanted to compete with ICICI Bank. That was the whole idea.
That's Shudip Bandyopadhyay, former managing director of Reliance Money, the non-banking finance arm of RCap. Shudip was enjoying a plush job as head of treasury and investments at ITC Kolkata when in 2004 he was approached to head Reliance Money. Remember, this was the time when the feud between the Ambani brothers was getting really ugly. And just a year before the business underwent a massive rejig and was divided between the two.
Finally, when I joined in early May 2005, by that time the brothers have fought and things were really messy. However, I was assured that things will be getting well soon and the ambitions were great. Maybe you guys will remember at that point of time, Reliance Capital didn't have really any business other than Reliance Mutual Fund. Reliance Mutual Fund also was not what it became and what it is now. It was one of the also ran mutual funds in those days with limited corpus, limited footprint, and limited credibility, I would say. So the ambition looked a bit too humongous. And when I joined, I was told that I have to pretty much set up the entire retail financial services business. And we went about doing that, starting from incorporating the companies, respective companies, getting the licenses. I was actually the first employee, you can say, of this grand plan of Reliance Capital.
At that time, private sector participation in the insurance business was getting big, and RCap decided to enter the space with a significant acquisition.
I was sitting in my office sometimes in June, July, rainy day in Mumbai. And, I came across the news that AMP Sanmar, one of the small life insurance company, was up for sale. And I knew by interaction with Mr. Anil Ambani and Amitabh Jhunjhunwala that they would love to have all the pieces together. Mm-hmm. I immediately brought it to the notice that this is apparently available. Why don't we, look at it?
Okay.
I didn't get a response, so I let it be. 15 days later, I think Ambit, which was Mr. Ashok Wadhwa, who was handling the mandate on behalf of AMP Sanmar, approached me, saying that whether we are interested. I again took the proposal to Mr. Amitabh Jhunjhunwala and others. And this time I was told, okay, go and explore whether we can acquire or not. And I remember along with 4 or 5 of my colleagues, remember none of us were insurance experts. We had financial services knowledge, but none of us were insurance industry experts. We went to Chennai, did the diligence for more than a week, 10 days, if I remember rightly. We were competing against Aditya Birla and ICICI and other life insurance companies. They were also there doing diligence. Finally, remember that 2005 massive Mumbai rains when everything got flooded.
Right.
That's the time when the AMP Sanmar team had flown into Mumbai to close the deal. And the deal didn't happen because of valuation, there was some discrepancy. And they were going to fly back. Fortunately for us, what happened is the flights were stopped. And there was no flights going out of Mumbai. And they had to stay put in the hotel. They were staying in ITC Grand Central. And I don't know what happened. Finally, they came back to the table and we were able to close the deal.
This was the first promoter buyout in the Indian insurance sector after liberalization. 6 years later, Japan's Nippon Life Insurance Company, Asia's top life insurer, agreed to buy 26% in RCap's life insurance business. Everyone made tons of money in the deal. Soon, more businesses were added to RCap's portfolio: general insurance, stockbroking, private equity, and money change and transfer.
Kuoni had a money-changing, money transfer business called Travel Mate. And we heard, this was 2006, I think somewhere end toward, we heard they are interested in selling. We approached, a lot of negotiations. Finally, we closed the deal. We acquired Travel Mate, named it Reliance Money Express. That's how Reliance Capital entered into money-changing, money transfer business.
In the shareholders' meet for 2006-07, Anil Ambani told shareholders that RCap had become one of the 20 most valuable private sector companies in India, with a market cap in excess of 25,000 crore and a shareholder base of over 1.3 million subscribers. It ranked among the top 3 private sector banking and finance companies. It had over 5 million customers served by 2,700 outlets in over 625 cities and towns. That was one of the largest distribution networks in the financial services space. The company's market cap reached a record 70,392 crore on 9th Jan 2008.
A lot of things happened in those, I would say, 4 or 5 years. And we were close to achieving the roadmap set out for us to make Reliance Capital number 1.
By the time the Adani scion Jai Anmol took the podium at the shareholders' meet, RCap's business had grown several times. Profits crossed record levels of 1,500 crore rupees. But just 5 years later, all of that changed. Its cash reserves had depleted from 1,500 crore rupees to just 2 crore. Losses had accumulated to 13,091 crore and the company went under with debt and dues of over 19,000 crore. What happened? I asked ET's senior editor and banking ace Sangeeta Mehta.
It actually started sometime in 2016 when Reliance ADAG Group started getting into other businesses such as power, infrastructure, media, telecom. And you see, all of them are cash guzzling businesses. It requires a lot of borrowing and a lot of equity infusion to get these businesses up and running.
And where did Reliance ADAG borrow from? That's right, Reliance Capital.
Sometime in 2019, or I think even earlier than that, Reliance Capital and Reliance Home Finance, the subsidiary of Reliance Capital, started lending to group companies. They started funding the other businesses, that is the telecom, power, infrastructure, and then they defaulted. And this is when all the trouble, I would say, started with Reliance Capital. Thereafter, the other big setback was same year, 2019, PwC refused to sign the balance sheet of Reliance Capital and Reliance Home Finance. And a lot of these issues that PwC raised, what we hear from our sources, is regarding this intercorporate borrowing between Reliance Home Finance and Reliance Capital that they gave to the subsidiaries of ADAG Group. So the last nail in the coffin was when CARE Ratings downgraded Reliance Capital bonds from investment grade to default grade. And then by then it was very clear that Reliance Capital will eventually be admitted for insolvency proceedings. Unfortunately, it took almost 2 years for RBI to get it admitted to NCLT.
Right, Sangeeta. But then let's come to the insolvency proceedings themselves, right? The company was admitted more than a year ago for insolvency. Why did the resolution process take so long? In fact, why is it taking so long?
Yeah, actually, Reliance Capital is a unique case. It's not like any other financial services company. You see, Reliance Capital is a core investment company. By itself, Reliance Capital has zero value. The value that Reliance Capital derives is from the equity that it holds in the 20-odd subsidiaries that it has and the equity that it has in its associate companies. The value that an investor is paying is for the equity that it has in the subsidiaries. And 95% of the value comes from two of the insurance companies that it has. That is Reliance Nippon Life Insurance, where it has 51% stake. And the other one is Reliance General Insurance Company, where it is 100% owned by Reliance Capital itself. Then there are these other subsidiaries like Reliance Asset Reconstruction Company. They have a retail broking company. They have a Reliance Security, Wealth Management, and whole host of financial services company. But then you see, Anirban, it's very difficult to find a single buyer who would be interested in all of these financial companies. So initially that took time, you see, that whether to sell it as a single unit or allow bidders to go for individual units. How do you sell the company? Eventually, the administrator, that is Nageswar Rao Y, he did say that, let us give an option to bid for Reliance Capital as an entire entity, or let us also invite bids for individual units, and we'll see later how it goes.
The going was good initially. As many as 54 companies responded to the call for bids.
But there were very few who showed interest in the entire cluster of companies that they had.
So eventually, 4 serious bids came. Which ones? A consortium between Cosmia Financial Services Holdings, a financial services startup, and Piramal Group, a conglomerate with business interests ranging from pharma to financial services. Then there was global asset management firm Oaktree Capital, and of course Torrent, and Hinduja Group's IndusInd Bank.
Piramal offered the highest among the four, and they gave 5,200 odd crore, which was way below the liquidation value.
Or the total value of all physical assets of RCap, which is about 13,000 crore rupees.
Which is when lenders decided to hold an auction, primarily with an idea that we should get maximum recovery for the financial services company. And Piramal Cosmia team actually backed out because they said that they didn't want to participate in an auction which was not conveyed to them at the start of the resolution process. And Oaktree also backed out. So then it left Torrent and Hinduja in the race for the company. And, this took away a lot of time in resolution of the process.
Now, the race between Torrent and Hinduja has not been very nice. Hasn't been an easy one. It has actually been fairly ugly. And how did that start? So at the auction that Sangeeta just mentioned, Torrent put an offer for 8,640 crore rupees and Hinduja's came in with 8,110 crore. So obviously the lenders declared Torrent as the winner. But then
the surprising development happened the next day when Hinduja gave a revised offer of 9,000 crore, and it was totally unsolicited bid, an offer which came after the auction. And it took everybody by surprise.
Actually, surprise and shock. Pleasant surprise for the lenders who wanted more money on the table, and a rude shock for Torrent, who obviously thought it would unfairly lose to the Hindujas. So, more court appeals followed, including Torrent going to the Supreme Court. But a second auction did happen. In that, the Hindujas won by bidding 9,650 crore rupees for RCap last week. Okay, so all smooth from here on? Not really. The offer is still below the liquidation value of 13,000 crore rupees. The lenders still aren't happy. At this offer, they only recover about 42% of their dues. The entity that is unhappiest is Life Insurance Corp, India's biggest insurer and a major lender to RCap. LIC has in fact threatened to not vote in favor of the resolution plan. If that happens, everything falls apart.
So one thing is that either Hindujas improves an offer or LIC agrees to vote on a plan which is below liquidation. So that is one of the biggest challenge that they may face. Now, lenders have said that they will negotiate with the H1 bidder, that is Hinduja, and Hindujas may probably increase their offer, but it would be marginal.
But there is an even bigger challenge. Remember I said the insurance business is the most lucrative part of the deal for the winning bidder? Well, a large part of shares of one of RCap's insurance companies is stuck with a bank, and it does not want to part with them.
Now, I'll just take you back to what happened in the past to give you the full context of the problem that is there right now with the administrator and the lenders. What happened was that sometime in 2019, Credit Suisse-led investors had invested in the bonds of Reliance Home Finance. And unfortunately, on the due day, they could not honor their commitment, and they defaulted. So as a part of settlement, Credit Suisse-led investors extended the tenor of the bonds, but then they also took additional securities. Now, these securities were in form of 27% shares of Reliance General Insurance Company and also a guarantee from Reliance Capital. So Reliance Capital guaranteed that we will honor the bonds raised by Reliance Home Finance. Now, unfortunately, they defaulted again. Reliance Home Finance could not honor that payment in 2019. The bondholders took control of 37% shares of Reliance General Insurance. Now, in this entire cluster of companies that Reliance Capital has, the insurance business is the most valuable of them. That is the general insurance and life insurance. And general insurance, 27% is with the trustee who is not willing to put it in the pool. Usually what happens is all lenders, when a company is admitted to NCLT, they pool all the assets and then they find a buyer for all the assets. Now, if they're not willing to release the share pledge, it goes nowhere, right? So unless a sweet deal is offered to them, that is the bondholders, I don't see a way that they will release a pledge of those shares. And that is very critical because nobody would buy Reliance Capital unless they get the shares. You would want to have control of the insurance company if you're paying so much money for it.
Okay, now why are these insurance businesses such a massive draw for the bidders? I asked G. Chokalingam, founder of Economics Research and Advisory.
Interestingly, even after all these crises the company has gone through, if you look at December 2022 results, Reliance Capital is still sitting on a very considerable size of insurance assets. In general insurance, it has more than 25,000 crore of assets. In life insurance, it has more than 31,000 crore of assets as of December 2022. Interestingly, both segments have made profits. General insurance made a profit of 293 crore in 9 months of FY23, and life insurance made a small profit of 37 crore.
Now, India opened up the insurance sector to 26% FDI in 2000 and increased that cap to 49% in 2014. It now stands at 75%. That has attracted a huge number of players. Now, almost every Indian insurance company has a foreign partner, and competition is cutthroat.
Which means for any new player to build this kind of asset is not going to be easy task because of extreme competitive intensity from the domestic player as well as from the foreign major players who have entered India. And because of this competitive intensity, the industry also having some margin pressure. But the point is that these entry of players had two implications. One, they created a new market. So therefore, despite the pandemic or all these economic growth slowdown, still the insurance business is growing in single digit. So this is another attractive point for acquiring, considering acquisition of this Reliance Capital business. And second, because of this entry of new players, it is going to be very tough to create a 56,000 crore of business. It might take even a few years. So therefore, these two structural changes also augur well for anyone to consider acquiring the insurance businesses of Reliance Capital.
Fair enough. But how would it fit into the business and growth plans of Hinduja Group's banking arm? Here's Sugata Ghosh, ET's Associate Editor.
Well, assuming that they finally get it, it is a nice fit for them. Hinduja as a group is steady, large, has some well-run companies, but there are no spectacular successes. So having sold the healthcare business, they have cash. So to scale it up, to go to the next level, and to take a new bet, it makes sense for them to go for a wider bouquet of financial services. Now, they're very much into financial services already, and they can always think of integrating the new businesses with IndusInd Bank and derive certain obvious synergies. Maybe there could be some structuring at a later point where the bank may end up owning a slice of the insurance business, say up to 30% as the regulator allows. So all this is playing out at a point where RBI has allowed the promoters, that is the Hindujas, to raise stake in IndusInd Bank to 26%. Earlier it was capped at 15%, and this has been going on for a long time, and finally it has happened. And while IndusInd has done some cleanup and its retail deposits and capital ratios are better than the pre-COVID levels, some asset quality pressures still exist. But at the end of the day, it's not a bank which has performed like other private sector banks. Mm-hmm. So at this point, if the group gets a good deal to pick up certain decent assets, why not?
Now, looking at the bigger picture a little, big conglomerates in the past have been quite fascinated with financial services, and we are again seeing a revival of that trend. What do you say to that?
Well, I would say that there's a lot of difference between what happened then and what's happening now. Historically, if you see the last few decades, not too many business groups have had a great success in financial services. In fact, if you look back, there are examples of how it backfired on some of them. Mm-hmm. Financial services are highly regulated. Indeed, we see new regulations and new disclosure requirements being added every year. It's not the kind of business that Indian business houses are used to, the kind of reporting requirement that are part of the regulations, disclosure requirements. Well, that is changing, but for a very long time, the business houses were not used to doing business like that.
Mm-hmm.
Besides, they can be capital guzzling, compliance risk is high, and in some cases, the forays into businesses were made without properly thinking through them. There was a perception that RBI would eventually allow corporates to own banks. So many corporates went into financial services thinking that is the first step towards owning a bank. Well, we know it hasn't happened, and there are no indications that it would happen. But today, with digital lending and fintech, the business landscape has changed rapidly. Anyone getting into financial services today will have to focus on how it blends with its existing businesses like retail, real estate. And that, of course, is a very different story than an existing group in financial services growing it through acquisition, like the way Hindujas are planning.
As the Reliance saga possibly draws to a close, we are left with more questions than answers. Since this is a financial services company, any takeover after the resolution process will require more approvals. From the RBI, the capital markets regulator SEBI, and the insurance regulator. Will they come easily? We can't say yet. Also, remember that Torrent moved Supreme Court against the decision for a second auction that gave Hinduja the lead? That is still on. Court will relook at the case in August. Any decision from the Supreme Court may not be binding on NCLT, but it will delay the seal of the deal for sure. The whole story has raised other questions too. Should big businesses hurry to diversify into financial services? Are the regulators wary of it? Often for good reason, of course. Now, who's to say other conglomerates don't want to get into it only for easy access to cheap capital? Often for their languishing or over-ambitious group companies. If that happens, other stories like RCap will happen too. Also, the story brings back the question so oft repeated about our bankruptcy proceedings. Shouldn't they be simpler? Are there ways to make them less lengthy? Now, just yesterday, the Wadia Group's low-fare carrier Go First filed for insolvency. It's in fact the first major Indian company to file for bankruptcy by itself. But this move puts scores of creditors in a bind, thousands of crores of rupees at risk, and several hundred employees in the lurch. For weeks? Months? Who knows? As for the RCap saga, its climax could be long and the conclusion could be very different from what we expect. So the Hindujas, or the Torrent Group, will have to wait before realizing their dreams of making a business out of the dust of Anil Ambani's crumbled empire. That's it for today. You were listening to this episode on The Morning Brief. It was brought to you by your host Anirban Chaudhary, producer and newest entrant to the TMB family Surohini Jain, and sound designer Indranil Bhattacharjee. TMB's executive producers are Anupriya Nair, Arijit Burman, and myself. Do like, share, and subscribe so that you don't miss episodes that drop every Tuesday, Thursday, and Friday on a listening platform of your choice. Thank you. Have a good day. All clips used in this episode belong to their owners. Credits are in the description.